Right, let's go to Cape Town next, and that's Coronation Fund Management. We like talking about this company. Remember, the group comes, from about the early 90s and went through a couple of different guises until they put the asset management business front and center in the form of the listing. It's got market assets under management of just under 600 billion rand. It was higher than that, then they had a bit of a bad patch and it's just slipped to 599. Still one hell of a lot of money. Market capitalization, 25.3 billion rands. Price to earnings ratio, 14.51. Dividend yield high at 6.89. That's historic, although we're not sure what their forward earnings distributions will be. Let's go straight to the graph, because the graph reveals that 2015 was not a good year for them. There was a sense that some of the momentum in the performance fees was sort of dissipating, but it has staged a bit of a recovery since then. What's your thinking?
Yeah, so from 100 Rand plus down to 50 and then up to about 75, I think reflects the uncertainty that investors are, where to for this company. The performance fees had a big part of it. There's also other issues.
Just to be clear, on the performance fees, they make quite a lot of money just through fairly low fee portfolios on the bond side.
And they were criticized about that,
But then you see some of their portfolios, they actually have like unit trusts and other performance mandates where they get like 20% of upside above something or another.
Correct.
So that's the bit that worries people.
Correct. So that's pure profit when they get it right, and the trend is to move away from that. So that will affect profit going forward, and I think that's what was reflected in the share chart there. They've had a few other issues. Remember, when you're that big, when you're managing 600 billion, you can't invest in every company on the JSE. So sometimes some of the boutique, more niche asset managers have actually had an advantage in terms of performance, because their investment universe, the number of shares they could invest in, is bigger than these guys. These guys can accumulate positions in a single stock over weeks and months before they get to the weighting they need to. And then there was another issue. I mean, the whole Theo Botha remuneration policy.
Just tell us about that. That was because he was a shareholder activist that wanted the management team to reveal what their deals were. Because over the last 20 years, there have been generations of Coronation management that have turned themselves into billionaires on account of their share options.
So the high level policy is transparent. I think it's 30% of profit before tax goes into the staff bonus pool. But how that's disseminated and broken up, they're not willing to disclose.
So that's cash profits, that's not actually share options.
Correct, yeah.
Because the share options are quite dilutive for the ordinary shareholders if they're too generous. And we've seen some US companies get criticized of that.
Yeah, that's right. So that's a bit of a cloud hanging over them at the moment. It isn't resolved. They're not willing to budge on it. So that's still going back and forth.
What about, because the problem with the trend is that if you have a purple patch as an asset manager, like you sell commodity stocks just before they go down, you buy healthcare stocks before they fly up, everybody thinks you're a genius. But if you roll the dice again and then you decide to get back into commodity stocks, but then they do worse, then you can inflict quite a damaging blow to your own reputation, because then people think you're not in sync with the times or something. Yeah,
that suddenly you've lost the ability to manage money, and it's just a timing thing. We can't always get it right all the time. So that's the tough part about these businesses is, you're rewarded for past performance, but you're also penalized if that isn't what your investors have come to.
And to some extent in that era from like 2010 through to 2015, 2014, they had a period where they had really superior performance and firing on all cylinders, and people thought they were geniuses.
And look, they've got a great team. It's a well-run business. Everything is it worth what you're paying for it at the moment? I mean, it's cheaper than it's been for a while. But yeah, I mean, I don't know where the growth is going to come from. So their international business is starting to take traction, but it's probably 25% of revenues, and that needs to go. They're seeing quite a few outflows at the moment because of those points you mentioned, and that's a concern.
Okay, we're running out of time, so not hot on the stock.
Not hot for me, Paul.
Yeah, also not hot for me either.